This is an updated version of the circular flow of economic activity which we saw earlier in the course. Let's just review some things there. So here's you and I as consumers, and we have a demand in the product market. That's our consumption. So we demand stuff in the product market. And of course, when we buy stuff, then we have to pay for it. And so these sales receipts go to the business. At the same time that we have a demand in the product market, you and I as consumers supply the factor market. We generally, there's land, labor, and capital are the major resources. So for most of us, we supply our labor and we don't do it for free. So the business firm has to pay the wage right here. So the factor market is where those resources, land, labor, and capital, are traded, and each one have their factor payments. And what's been added here is the banks. The banks make loans to you and I, and the banks also are a place where you and I do our savings, and banks also make loans to business firms. And so in a sophisticated financial market, it's like oil to a machine. Having money flow, when you have oil on a machine, it helps the machine function better. And so when banks can move money from savers to borrowers, they're doing a good thing. That's called an efficient capital market. And so what you're doing, what the banks are doing, what the financial system is doing, it's moving money from those that have a surplus and don't really need it at the time being, to those that want more money and do have a need for it. And of course they have to pay a price, and the price is called an interest rate. And then you get into your financial economics to determine what the rate of return is. We've already seen that if the rate of return, the expected rate of return, is bigger than the interest rate, then you would do the deal because it makes sense. So that's that I equals R equation. In any event, so this circular flow is a bird's eye view of the economy, and what you want to remember is that in a sophisticated market, you need a sophisticated financial system that can move money around because it makes the machine operate better. It makes everything more efficient. It makes trading cheaper.